investment finance goes. But let's quickly shift focus to a Thermax. Now, Thermax, if you see, the revenues are absolutely in line. Margins and profits have beat street estimates. Let's welcome in Ashish Bhandari, MD and CEO at Thermax, to understand more. Ashish, good morning and welcome to the show, and a pleasure to speak to you as always.
Good morning, and it's my pleasure to be here.
Thanks. Ashish, my first question coming to you is, clearly we've improved on the margin front. Profits are up 45%. Have the numbers met our internal expectations?
Yes, actually, in some cases, even exceeded our internal expectations on the profitability side. There was one particular project, roughly about 25 crores of profitability. This was an international order that got completed this last quarter, and we did a particularly good job on execution on that project. So it has given us a slightly additional bump. But in general, the environment is stable. We have said that for some time that last year, with all the commodity price moves, it was very difficult to pinpoint prices. And currently, with a stable environment, we are doing a better job, which is reflecting in our bottom line as well.
Right. So clearly, if I'm seeing the first half FY24 performance as well, industrial products, green solutions, absolutely strong revenue growth is what we've seen. Industrial infra has grown at low double digits, while the chemical segment has been the weakest with a 2% year-on-year growth for the first half of FY24. Going ahead, which are the segments that are expected to be the growth drivers for the business, and where are you expected to see weakness?
Look, all four overall are, I expect them to grow. Yeah, all four. If I say relative positioning, overall, I'll take them all one by one. Yeah, chemicals would like to see more growth, happy with the profitability, but this has to become a much bigger part of Thermax. And for that to happen, we need to grow the business a lot faster. And here we have had, with all the, especially, most of our business out here is exports. There's been some weakness which has affected us on our top line number. But my expectation is that the business continues to grow. Green utilities and green solutions, we are putting in a lot of money, and you can see a lot of our capex is going out there because these are all build own operate businesses. And here there's a lot more surety that the business will go because the orders are coming in, and each contract on is either 10 years or 25 years. So these are long-term contracts with customers. I expect that this business in 3 years would be somewhere between 10 to 15% of Thermax. Industrial products, particularly happy with how this business is working, growing double digits, growing profitably, and in some senses, continuing to show the general multi-industry strength of India right now. Industrial infra, large projects have been few, especially in the first half. We haven't done a good job of winning large projects. I do expect that the second half would be better, and an expectation that the profitability in this business also continues to improve. So overall, I do expect better performance in the second half on orders. The strength overall in our baseline and profitability, I think maybe Q2 was a bit of a high, but in general, the improvement from last year, I completely expect to see and deliver.
Right. So overall, what's the order book looking like, and what's the executionable pipeline so far from the existing order book in the current financial year?
Backlog of 10,200 odd crores is quite stable and has been there for some time, which means executing about 2,500 crores, something in this nature, should be doable. Yeah, what I would like to see now is starting to get back on that orders growth. For 4 quarters in between, we were doing that. This last quarter was a bit of a step back, and would like to see better orders growth in the second half.
Okay, and what's the target looking like? Any number that you can share with us?
See, with large projects, very difficult to determine. What gives me confidence is that the uh, pipeline of overall projects we are bidding on is decent. So we know there are few things in play, but the sectors that are in play right now, steel, cement, biofuels, some international projects, they are tough to pin down from a timing perspective. I've said that previously as well. Refinery and petrochemical, especially government-driven projects, there's slightly more certainty that if you bid it in a particular month, the bids will open in a particular period and know if you won them when you will get awarded. Right now, the clarity is a little less. That said, as I said, the overall set of projects we are bidding on still give me confidence.
Okay. And with regards to new order inflows, will the concentration be with regards to industrial infra? Because that has been a segment where the order balance is slightly decreased on the back of project executions. Plus, as you mentioned as well, you are looking out for bigger orders, which were there in the previous year. So is this segment going to be a focus area?
Yes, it would be. I think because this is the sector from where some of our bigger orders come. The caveat that I would put is that my expectation is that we get good orders and orders that we can execute profitably. There has been a tendency in the past that some of our larger projects have also been some of our less profitable orders. So I think we would like to break that trend. And while industrial infra will be dilutive overall, from a working capital perspective, we do a great job. These are all typically negative working capital projects. And while margins are relatively lower, I do expect margins out here also to be better than what we have done in the past.
Right.
And even that goes for the new orders as well.
Right. And with regards to the litigation pertaining to the customer equipment breakdown, where does it stand currently? And, what's the provisioning done so far and how much more is expected?
See, we have taken a reasonable provision last quarter of 50 odd crores. The overall exposure is slightly more than 200 crores. We have our case now will get heard in the higher courts, and that process has started now. We have stated whatever we can publicly in our previous press release. There's nothing more to add. You will see that in this particular quarter, we will also make a cash deposit to the effect with the courts to put our stake. But overall, whatever we have stated in our previous press release, we stand by that even now.
Right. And Ashish, my last question coming to you is, in terms of FY24 as a year, what's the kind of CAGR growth that you're looking at? Will it be maintained at current levels, or is it going to be better than what you've done so far in the last 3 to 5 years?
Look, we'll all have to wait for the second half to see how it unfolds. And for larger projects in particular, tough to determine. Yeah, when we started this year, my expectation was that we would be able to do a double-digit growth this year, and we have clearly not done that in the first half on orders. But I do hope that the second half would be better. Yeah, and as I said, there's a reasonable pipeline.
Right. All right. Thank you, Ashish, so much for joining us on the show and sharing the views. So clearly, the second half is something that we should be watching out for. So that's with regards to where Thermax goes. Yes, there has been some bit of a weakness that we've seen with regards to the second quarter in few of the segments. Now, whether the large orders will come through in the second half where the company is looking at is what we need to wait and watch. YTD almost 50% is the kind of up move that we've seen on the counter. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.